Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news long-term global bond yields are rising. The coming week will be one dominated by the final central bank monetary policy decisions of the year. The big one, the one that will likely move markets, is the US one on Thursday New Zealand time. Markets expect a 25 basis points cut to 3.75%. There will also be central bank decisions from Canada on Thursday, where no change is expected. From Switzerland on Friday, again no change expected. From Australia on Tuesday, no change. Brazil on Thursday, also no change. And Turkey on Friday, with a 100 basis point cut expected. This week will also feature China releasing a series of key economic data, including for exports, expected to be strong. CPI inflation expected to rise marginally but stay very low. Producer price inflation, which will expected to be still in deflation. Monetary and debt data will also be closely watched. In Japan, it will be all about their third quarter GDP, their producer price index, and machine tool orders. In India, markets will focus on November inflation data. In Australia, apart from the expected no-change RBA decision, labour market data will likely show their jobless rate edging up, and business confidence surveys are expected to be broadly stable. At the end of last week, bond markets kept pushing up long-term yields. The rise of Japanese long bond yields has this market concerned, but that comes just on top of where US fiscal stability is heading. In the US, personal income data is in catch-up mode, with September details released over the weekend. Income was up 1.9% from a year ago, while personal expenditure was up 2.1% on the same basis. Their PCE version of inflation was 2.8% and rising. There are no real surprises in this now old data. Meanwhile, US consumer debt rose 2.2%, or by $9.2 billion in October, less than expected and less than the September rise. Revolving debt, like credit cards, rose at an annual rate of 4.9%. Non-revolving debt, which includes car and student loans, was up just 1.2%. Earlier, the University of Michigan December Consumer Sentiment Survey reported it didn't fall from November, posting a small, probably insignificant rise. That leaves it 28% lower than a year ago. Year-ahead inflation expectations decreased from 4.5% last month to 4.1% this month. Despite the nominal improvements, the overall levels across the board remain quite dismal for most consumers there. And Canada reported payroll data for November over the weekend, and rather than the expected 5,000 jobs dip, they got a 53,600 gain in overall employment. But unfortunately for them, all the gains were in part-time employment, with full-time jobs shrinking slightly. This extended better-than-expected labour market report is one reason the IMF's latest review of Canada was quite positive. They're impressed by how Canada is handling the attempted trashing it has been getting from the US. In China, their foreign exchange reserves, already very large, climbed to $3.346 trillion in November, and fractionally less than expected. There was the fourth straight month of increase to the highest level since November 2015, and it happened even though the US dollar weakened. Meanwhile, the People's Bank of China continued to add to its gold holdings for the 13th consecutive month, with reserves edging up to 74.1 million troy ounces in November, and their value rose 4.5% in the month in US dollars. In India, and as expected, their central bank cut its key repo rate by 25 basis points to 5.25% at its Friday meeting. They claim confidence in a softer inflation outlook. And the RBI has now cut rates by a total of 125 basis points since the beginning of the year, bringing the repo rate to its lowest level since July 2022. In Japan, personal household spending fell unexpectedly in October, and quite hard. It was down 2.9% from a year ago, way different to the market expectations of a 1% rise, and reversing the 1.8% gain in September. It was the first decline since April. From September, personal spending fell 3.5%, a starkly different result from the expected 0.7% rise. In Germany, factory orders rose 1.5% in October from September, better than the expected 0.5% gain, but slowing from an upwardly revised 2% gain from the previous month. From a year ago, though, their factory orders are down 0.7%. The latest data was boosted by a very large, that's an 87% jump in orders for large equipment like aircraft, ships and trains. There was also a 12% rise in metal production and processing. In contrast, demand for electrical equipment fell 16%. These are all quite big moves within the overall change. Globally, the Food and Agricultural Organization says its food price index declined for the third consecutive month in November, with all indices but cereals down. Dairy prices were down 1.6% from a year ago, down 11.5% from their June peak. Meat prices were up 5% from a year ago, but down 2.7% from their September peak. It's probably worth noting that the Argentine wheat crop is going to be huge this year, one that will have global impacts. In Australia, their winter wheat crop will be the second largest ever too. Also worth noting is that Trump's boast to farmers that the Chinese will be back buying American soybeans in a major way was just fantasy. They have bought only minor volumes. Administration officials are now admitting there was never any agreement. And we should also note that the copper price is moving up sharply again, back towards its US tariff-induced July heights. The US Treasury 10-year yield is now at 4.14%, unchanged from this time Saturday, but up 12 basis points for the week. And the price of gold will start today at $4,197 an ounce. That's down $18 from Saturday, down $13 for the week. Silver is moving higher again, back up over $58.50 and near its record high. And American oil prices are holding at just over $60 a barrel, while the international Brent price is still just under $64 a barrel, and up about $1 for the week. And the Kiwi dollar is marginally higher from Saturday, now just under 57.8 US cents, up 50 basis points for the week. Against the Aussie, though, we're unchanged at just on 87 Australian cents. Against the euro, we're also unchanged at 49.6 euro cents. That all means our trade-weighted index starts today at 61.9, a little change from Saturday and from a week ago. And the Bitcoin price starts today at $89,503 and up 0.7% from this time Saturday. Volatility over the past 24 hours has been modest, though, at just on plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.